Good morning, traders. It is Monday, February 24th, and we're about 2.5 hours into trading. Let's see what the market is doing. Many of you watched the video that I posted Sunday night. We knew this was going to be a nasty day. Thank you so much for the thumbs up. I'm glad you enjoyed the content. I'm going to keep this very straightforward. I'm not going to get into the I told you so's. Market is down. What do we do now? Okay, so we are largely in cash, all of my members anyway. So we're on the sidelines looking for opportunities right now. We can have a very nice objective opinion of what's going on, evaluate the market, no lunging, nice deep breath, be calm. So here's what's shaping up. We're going right into the S&P 500. And I'm going to take off these buy and sell signals, and we're going to take a look at the daily chart first just to get an idea of where these major technical support levels are. So you can see an inverted hammer right in here, which is not a particularly good sign, a little bit bearish. We're right on that 320 support level. We're at 320, 340 currently, but I think 320 is in striking distance. That is a horizontal support level. I'm going to very quickly put up the major moving averages. 200, 100, 50-day. That 50-day was a technical support level. You can see it here around the 327 level. That's also an upward sloping trend line that I drew yesterday. I don't want to complicate the chart, but you can visually see it. This is a critical support level, and we have currently violated it. So a little bit bearish on that. That was a support level, 327. 330, those levels have already fallen. We're starting to see a little bit of panic selling. So on a drop like this, bullish speculators were not flushed out of the market. Well, why not? When it happens so quickly, you get that initial drop and everybody kind of sits on their hands and, oh, here we go. We got a little bit of a bounce. I don't even know that they were flushed out on this second long red candle, and then the market grinds higher. But on a move like this, oh yeah, there is some serious hand wringing going on right now. So we'll go into that 5-minute chart and take a look, see what the price action is telling us. So we get a big deep sell-off, couple of long green candles. This was a nice start, but then we start to see tiny little bodied candles. I told members, I said, this is not a good sign. This is a sign of resistance. Sure enough, we start to march a little bit lower. This was a very telling moment right in here. Well, why? There's nothing going on. This is what we call a price compression. And this is the 1OP indicator. This is a proprietary indicator that I've spent 10 years developing. It is the only thing I need to trade the S&P 500 futures. Well, what is it telling me right now? A compression like this with sideways price movement and the indicator moving higher tells me that there is a bearish divergence. Well, what the heck does that mean? Typically, when this indicator is going higher, the market is going to go higher. When it doesn't, when the market doesn't follow suit, it tells me the next move is going to be lower. You can see how high the 1OP indicator spiked, and then we had a bearish cross in here. I believe we're going to take out this low of the day. Now, on a daily basis, you can already see, I told you that I don't think bullish speculators were fully flushed out on this drop. They were able to kind of hold their positions. They had to shoulder that initial move. They're hoping to do the same thing today and that we would get a bounce and they'd be able to get out at a better price level. But we're at a juncture now to where another leg lower and they are going to be taking serious pain, and that's when they're going to have to hit the exits. Possible margin calls coming up at this level also. And we are selling off for the first time off of a new all-time high. These moves tend to be relatively dramatic. And all I have to do is to scroll back a little bit further this year, and we could take a look at a sell-off from a relative high right here. So we make a high, we pull back a little bit, we test that high, kind of same thing that's happened now, and then wham, 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 some really deep selling. So this won't get bullish speculators out. This might not, but certainly by the time you break this major moving average here, oh yeah, that's when you get your big gap down. I think we're going to see more pain on the downside here. I think that coronavirus is just finally getting the respect that it deserves because of its economic impact. Now, the virus itself, I believe there are probably going to be some treatments available in the next month, month and a half. But what type of economic pain do we go through during that process? And China already does have a cocktail of antibiotics that they've been able to give patients, and that has been effective. Now, this virus unfortunately incubates for 14 days, and it can be passed from one person to the other before that person even shows any signs or any symptoms. So that's kind of the danger, and it is starting to spread into other countries, and that's why the market is down today. We're starting to see a lot of cases in South Korea, starting to see a lot of cases in Italy, starting to see an increase in Iran. So market is selling off, but good news has been priced in. To this point, everybody has said, hey, you know what? All these low interest rates are going to keep investors in the market. We'll ride out this little mini speed bump. We'll be back on track in 2 or 3 months. No problem. And that is fine. If you've got a long-term perspective like that, that's great. But on a short-term basis, you have to be able to weather some pullbacks like this to be able to stay in. After a massive market rally over the course of the last few years like that is a huge market run up. There are going to be some people that are willing to lock in profits at this level. So we will see some profit taking, and I believe that we're going to see the market fall a little bit. So let's go into that 5-minute chart. And here's what I'll leave you with. I don't think that we've seen the end of the selling. If we compress here for a little while and this turns into a 1-hour compression, then yes, we'll end up seeing a bounce and we'll try and get into that gap. So what I would be looking for right here in the next 10-15 minutes is a failed attempt at a little lift off here and a little bounce, and then a couple of red candles that close on their low and take out this low of the day. If I see that long red candle and another long red candle, both closing on their lows, that is going to flush out any of the dip buyers here from the open, and you could start to see some sell programs kick in. Things are already very, very ugly today, and there is a lot of nervousness on the street. So that's what I would be looking for. In the outside chance that we do find support here and it lasts for an hour or so and we get into midday and this low is being held or we're close to that low, then we probably are going to see a little nibbling come in, and maybe we try and get back into this gap a bit. But I think that from a swing trading standpoint, you've got to be in cash. You've got to be on the sidelines, because the best trade, as I've been saying, is going to come off of this deep market low, big sell-off early in the day, and a strong intraday reversal closing on its high. That bullish hammer is what I'll be looking for. You watch these videos daily, you're going to know when it happens, because I'm going to tell you when it happens. And when that move is seen, that's when it's going to be time for us to get long, and get long in a big way. That will be a much, much, much higher probability trade than trying to buy puts here on a swing basis, because at any moment you could have this thing fly back and your puts could look great 1 minute and they could be a disaster the next minute. So swing traders should not be trying to buy puts in here. That's just my own personal opinion. But for day traders, there are some good shorts setting up, and I'm going to show you a few stock picks that we have. So let's get into it, and I'll show you stocks that I think will do well today and probably overnight. Apple's been very weak. You saw this in the video yesterday. You can see how it's got this downward sloping trend line, and it's checking that opening price from today. I'm going to go into the D1 chart. I'm going to take these buy and sell signals off. And you can see the orange line below zero. That is relative weakness. You can see the stock below the 50-day moving average, that thin pink line. That also is a horizontal support level that the stock has been able to breach. On a 5-minute basis, that orange line is right at that zero mark, so we're looking for it to leak lower. I believe Apple is going to struggle. They've already said that they're going to miss their revenues. They just didn't say by how much, and it is supply chain related, because a lot of their components are built in China. They've also had to close their Apple stores. So I like Apple on the short side. I also like ABT, Abbott Labs, on the short side, just because of the price action. You can see this downward sloping trend line here. You can see this bearish hammer right in here. As long as that downward sloping trend line is intact, I like it on the short side. You can also go into the daily chart. You can see the 50-day breakdown, and most importantly, this breach of the 100-day moving average. So that is your stop out point. It's likely to test that 200-day moving average. So there are a couple of decent looking shorts. I'm going to show you some longs because this is a time to actually see which stocks are holding up well. Gilead, beautiful breakout to a new all-time high, and this is coronavirus related because they've been working hard on a vaccine. So this opening gap higher is holding for now. I am long the stock, and if the market rebounds, I think that this stock will actually perform well. Even if the market doesn't rebound, as long as they're close to providing a vaccine of some type, I think the stock is going to continue to garner interest. Now, I don't want it to drop much below this, or I will stop out of the trade. GILD was the symbol there. Here's another one that we've been long. CLX. What the heck is that? Well, what do you do when you have a natural disaster or when you have an outbreak like we have currently with coronavirus? You disinfect everything with bleach. This is Clorox. So Clorox is doing well. It probably will continue to do well. We've seen this stock rally big after a lot of the hurricanes that we saw down south in Louisiana and Texas because everyone's trying to disinfect everything. So I think CLX is probably going to do quite well over the course of the next few weeks while conditions worsen with the coronavirus. And you can see it here breaking out to a new relative high. So I like CLX on the long side. And I'm going to mention one other stock. By the way, you can see the S&P 500 starting to dip down and test that low of the day. We'll be back on it in just a second. I do want to make an observation here because stocks that go parabolic like this tend to get trashed when you get a market sell-off like this. SPCE is hanging in there remarkably well. Do I think this is a fantastic buy here? I don't know enough about the company. I just look at the technicals. And when I see a stock go from $8 to $42, my gut instinct is sell, 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 sell. But today it's actually holding up pretty well. So I will be looking for a buying opportunity in this when the market finds support. I don't know that that would necessarily be today, but if the market finds support in the course of the next week or so and I see this relative strength holding, then I'll be really interested in it. You can see it's drifting lower and it established an early low, but I'll tell you, normally a stock like this that's run up so far would sell off maybe 5 or 6 points in an instant because a lot of that rally was short covering related. It was fluff. Nobody really believed the story, and they would take those gains away right away. This tells me that there are buyers. So I think the move in SPCE could be legitimate, could be a nice long over the course of the next maybe 2 or 3 weeks. So that's a stock to watch for. I'm going to conclude with a search that I like to run. This is part of Option Stalker Pro. So we get a lot of searches that we can run intraday for day trading. And here's one that I've been using this morning. I want to see heavy volume today. I want to see good option liquidity. I'd like to see negative momentum on a 5-minute basis and a 15-minute basis. And I want to see weakness versus the SPY. Run that scan. There's your list right there. These are probably all excellent stocks. I haven't looked at Facebook, and I just noticed it on the list. So let's get this off the screen. Let's see what Facebook is doing. Maybe that's a good short too. Market, you can see it there dropping down. Facebook, excellent short right here, right now. Do you see how easy that search was to run? So easy. Let's go into the D1 chart, daily chart. Break down below that horizontal support, below the 100-day moving average. Facebook looks like a good short to me. That's it for today. If you've got swing trading positions on right now on the long side, you do need to have a hedge. I've been urging everybody to own some VXX. I'm going to take a look at that very quickly. That has been an overcrowded trade as well, with institutions and individuals selling option premium like it's going out of business. This measures the option premiums, option implied volatility on the S&P 500 options. And when it gets super, super low, it tells you that nobody has been hedging their positions. Asset managers have not been buying protective puts because they don't see any risk in the marketplace. If they had been buying protective puts, the implied volatilities would be much higher. So now asset managers are scrambling to either reduce risk by selling some of their holdings or by buying protection. So that's why option implied volatilities start to spike. That's why we own VXX as a hedge. So we're doing really well on that position. We're long it from under the $14 price range, and it's currently up to $17. So really nice gain there. If you need some protection, I would consider buying VXX. Buying S&P puts, you can do that, but you're late to the game now. The deal was you needed to start pairing out of your positions and reducing risk last week ahead of this sell-off. That's what we had been doing. So, boy, really tough from a swing trading standpoint. An investment standpoint, I think long term, if you have really good staying power and you're long from years ago, you're going to have to just weather this storm and know that you're probably going to take some heat over the course of the next few months. But eventually, this virus will run its course and you should be fine on your longer term investments. Short term trading, though, I am going to be day trading from the short side here. We've got that new low that I had mentioned to you. I'm looking for stocks that are good shorting opportunities. I'm not doing a ton of option trading. The option bid-ask spreads have widened out quite a bit. I'm also having to pay a lot of implied volatility, which I don't like doing. Intraday, I love shorting stock because it's so easy. You short it and then you could put a bid out there and actually buy the stock to cover on buying on the bid. So I am preferring to trade stock. If I were trading futures, that's also a really good alternative. I would not be buying SPY calls and buying SPY puts. There, I think you need to be a premium seller. So if I'm wanting to be short the market, I'm looking to sell either the February 24 out of the money bearish call spread, or you can actually go out to the February 28 expiration, but be short, very short term time premium because option implied volatilities are very, very high right now. If you wanted to trade the long side, then you would want to sell out of the money bullish put spreads when the market would find support and show you signs that it's ready to move higher. But for right now, we're taking out this low. Anybody that bought this low early in the day may be on the verge of getting shaken out. And before I left the chat room, I said, look for two long red candles closing on their low. We don't quite have that, but when we see a long red candle closing on the low, that'll tell you that we've got the next leg and more pain ahead of us. I think we're going to have a bearish trend day today, and I don't think we've seen the worst of it just yet. So hang in there. Take a look at the trades I posted. Please sign up for or subscribe to this YouTube channel. Sign up for the notifications so that you never miss one of these videos. Give it a thumbs up if you like the content. I will be trying to post more videos. We've got big market movements right now, so I will try and post maybe 2 videos per day. Thank you. Trade well. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.